come off the month. So you're gonna come off the monthly time frame.
Okay.
So your time frame, what I want you to do for me, I want you to drag and I want you to drag, just click anywhere in that and then drag and hold it down and pull it up to the top. You know that the monthly time frame, where you got the monthly time frame to the side. Just click hold onto it, just left click on it and hold it down and pull it up to the top. Just just hold it and drag it up to the top. Just click somewhere, just click in there, just hold it down now and then drag it to the top now.
Right, that's what I'm doing. Clicking on it.
And then pull it, drag it. And then you've got to hold it down, you know. You got to hold it down and like you're pulling it and drag it.
That's what I'm doing, Marlon.
Okay.
I'm not letting go.
Okay, what I want you to do is click in, just right click on it. Right click on those times that you see there. No, the times that you see there. Okay, go to for me. It's just that I don't like to see the time frame there, to be honest.
Time frame? Do you want me to change it there?
No, I'm just saying. All right.
I don't like it there either.
I go to view. And then go to toolbar. And then click on the X for time frame. Just click on the highlight for time frame. Okay, and then click on the market watch. Click on the X market watch. No, get rid of market watch. Okay, and now what I'm gonna want you to do now is because there are a few things that are not on your thing. Go to view. And then what I want you to do, I want you to go to toolbar. And I want you to put standard. Okay, and then go back to view again, because that's going to give you all of the things you need there. And then go to toolbar. And then I want to put line studies. Okay, yeah, brilliant. And then go back to view. And then go to toolbar and then go to time frame. Okay, now we need to drag and pull that time frame over the other side. No, you know where you see those little arrange, auto arrange. Click on auto arrange, let me see. Okay, right, all right. And then right click again over the section, the left side, go back. Okay, let me see. Go to go back, right click on that side, right click again, let me see.
Where I am, where the cursor is.
Yeah, where cursor is. Just right click there, let me see. And then go to custom arrange, customize arrange.
Customize.
Yeah, arrange, yeah. Okay, all right. What I need to do now, I'll just click on the X there for me. Now, what I want you to do for me, I want you to just go to the bottom of where you see the MN. Go to the bottom of where you see MN. Just below it. And then depress it and then click and then drag it to the right, to the top. Just click on it, hold down and drag to the top.
Right.
Just click there and then drag.
Right, I'm left clicking.
Left click and then
holding it down and dragging.
Yeah, all right, okay. All right, let me tell you now, it's not doing. All right, go up to where you see those the dots. Just below the cursor looking thing. So up some more. No, so. Now what I want to do, so go up. So go back to the left with the cursor, please. Go back to the left. Move your cursor for me. Yeah, and then down again. Yeah, there, no, up slightly.
Oh, I see the dots
right there. Yeah. Click on that and see if we can drag it now from there.
Okay. Yeah, I think that's it.
And then move it. Yeah, that's brilliant. Yeah. So now that you've got it, the chart looks much better now, because you don't really want your monthly there. No, what you're gonna do now, just zoom out of it for me. Go to the plus and minus button and then zoom. Zoom. Okay, and then click the one that's gonna move it to the left now. So move your cursor slightly to the right. To there, yeah. No, next one. That one, shift to the end, yeah. And then make it a little bit bigger now. Okay, now we need to go to the daily time frame. Okay, so you can see where you had that buy, yeah?
Yeah.
But of course, the market could come up to this point and then turn around, because this is Aussie USD. But if you notice, if you look left, show me a cursor now where the market was on the 9th of October 2020. The 9th of October 2020. Can you see where up now? Up with the cursor, up. Can you see where the market was then? And you see every time the market goes there, it goes back up. Go back to the right. Now go to the right. Move to the right. No. Don't pull the chart. Just move your cursor to the right. Can you see how it respect that level?
Yeah. It's hit 3 times.
Every single time it goes. You see what I'm saying?
Yeah.
So therefore, that's a strong what we call demand zone. So people think it's cheap. Now, if we go back to the top, now you can see roughly the market, when it goes up to a certain point, it always come back down. And that's something that we can always see, you know? You understand? We can consistently see, you understand? That the market is like this, you know? So all we've got to do really is we're looking at the supply and demand zone. But of course, as I said as well, that look, you know, this is just one way one can trade. But I rather to do a trade like this for more long-term strategy. So I'm waiting for the market to go, but you've got to wait up probably a few months, you know. So you're looking at probably making, you know, a few £100 to £1,000 over a period of time, but just waiting. But you've got to be patient with this sort of trade.
Okay, but just as an example, though, where it's at the moment, where it's red. Okay, it looks like it's going down. Now, if I was to place a trade here, I could do a sell.
Yeah, you could sell it, but say you want to buy.
Because I think it's going to hit. Yeah, I think it's going to hit the bottom.
Okay, you could always sell. You want to sell? You want to sell there?
I'm just I could.
Okay,
I could just...
so go to Aussie US. Go over to the left, and then what we're gonna do, and if you click sell, and what we're gonna do, we're gonna pull. We're gonna do no. Then go back to the chart now. So you're gonna hover over the sell, and then you're gonna pull down. Pull it down. No. You're gonna hover over it till you see a vertical line, a vertical arrow line. That's it. Then press it down and pull. So that's gonna be a profit all the way down to where it was before. About there. You stop there. Don't be too greedy, sort of thing. Up slightly, and then you're gonna pull up to a previous point. So pull up. Now this is gonna be a stop loss. Now you're gonna put in some pull up. Hover again. Hover again. Until you see the vertical line, hover.
Doesn't always.
No, hover again. No, down, you just need to go down slightly. Yeah, that's it.
Is that it?
Yeah. Up. No, you have a vertical line. You need to get the vertical line. So that's it. That's it. When you see the vertical line, that's it. So move it up slightly. Okay, stop there. So you're risking £25. Now go back and hover over your take profit. Yeah, go back down to take profit. Okay. So you're looking to risk, you're risking £25 to make £67. So you're looking at roughly a 2-to-1 type of trade. Okay. So the market goes down, you're going to make profit. You understand? Yeah. But then what you do, say the market comes down to say in the middle. Yeah, in the middle of those two lines. Yeah. Then what you could do, you could move your stop loss to break even. So let me show you what I'm talking about. So if you stop sharing for a minute, and I'm going to show. Now, say you've sort of bought now and or sold. Now, in that case, you sold. Yes, so we sold the. Now, if you notice now, I'm in profit on the USD Jaffy. I'm in profit, say £48. Yeah. Now, what they say I had my stop loss up there. So my stop loss I was risking. If you look at this here, can you see that 13, 17? So I was risking the previous high where it was before in the past. So I pull to the right so I can see. So hover your left click, pull down. Right, so I am basically I'm risking 60 something pound. The potential is it could come down. Yes, I'm risking like 2-to-1. Yeah, so that's what I'm looking. So the fact that it's already in profit, right? What I could do is to protect myself so I don't lose any. I could just move it down to this is what we call break even. Okay, so that's what we call break even. Now I'm looking for the market to come all the way from there to there, and then I would make 180. If you look at the Euro USD now. Okay, the GBP Euro USD. I'm looking for my profit up to where it was previous before, or I could even look it for there. But what I've done, I've moved it to break even. Yeah, at the moment, the GBP. Let's look at the GBP USD. GBP USD. That one is up, say £93. Yeah, you put it there, But you did ask me if I could buy at the zone. Now I could put a buy here, and if the market comes there, I could always buy. So I'll show you, this is what we call a buy limit.
Yeah.
Yeah. So let me go back to the one that you did. So if I go back to the USD, so go to the USD, the USD Aussie USD there, yeah.
Mm-hmm.
Okay, so I'm gonna show you now. So if I've got Aussie USD, right, what I could do is I could say the potential is that it's coming back down. I could actually put a buy here. Okay, and I put a buy, we'll call a buy limit. So put a buy there. What I'm gonna do now, I'm gonna put a stop loss in. So what I could do, I could go to an average to range. This is what we call an average to range. This is one of the strategies that what we use to see where we should put our stop loss. Okay, so basically it's telling me 117 pips, yeah? So I'm gonna put my stop loss at 117 pips, okay? From here. So here now is where I'm looking to buy. If the market comes down and hit this, then I'm saying, you know what, this is for the future and I'm just leaving it there. So the market comes down, I'm gonna put my stop loss to 117 pips. Okay, I'm gonna show you how we're gonna get the 117 pips here.
Mm-hmm.
Okay. Why is it not showing? This is something. Okay, so yeah, I might press, okay. So that's my stop loss, but it's not showing modified. Oh, did I put sell there? It's not allowing me to so I'm not sure why it's not allowing me to it's only having me put, it doesn't want me to put it's not allowing me to put okay. Yes. You see, it's now obviously what will happen here. Oh, sorry, I was pressing on the wrong one. I was clicking on take profit. Sorry about that. I was clicking on take profit, and my stop loss is over there. Okay, so there's my stop loss then. So I'm going to make my stop loss 111 pips. Okay, so that's my stop loss now. So far, that's, you got to look now. So that's 72 pips, 81 pips, 91 pips, 102 pips. I'm going to do 111 plus 5, yeah. So that's it. So that's my stop loss. I'm looking to take profit if it goes back up to this zone here. So that's going to make me, I'm looking for a profit there of 25 pounds. And we've got a stop loss of 9 pounds. So I'll be risking 9 pounds. I'm risking 9 pounds to make, can you see that there? 25 pounds. So it's like a 2-to-1 trade. Well, 3 9s 27 would be 3-to-1. So that's what we've got there. So if the market comes back down to this point, it will trigger me into this trade. What I could also do, if this was say a zone, if this was say a zone, yeah, what I could have done, I could also sell here. I could do what we call a sell limit. And if the market comes up to this point, I could then basically, right, I could basically take my profit. So because it's sell, I'm gonna click the down button. Yeah. And that's going to be my profit, okay? And I'm also going to put my stop loss in. So my stop loss would be above, okay? Now remember, I'm just sharing this with you so you can actually see in terms of if you want to buy at that point. So this is another strategy that some people use. I don't use this one really, but because I was asked, that's the reason. So my stop loss could be there. Okay, and my take profit is there. Where it touches that, this moving average. Okay. And I could actually use, when it comes there, that's 100 pips. We could do the 16 pips there, risking 9 pounds. And then my target is there. So I literally can have the market come down to me and then trigger me into up, and then the market could go up there and then come back down. You understand? And I can make profit in both directions. Okay. Now, any more questions? The reason why I've got the stop loss up there, because I'll show you two different strategies. I've shown you one strategy that can be done in 2 different ways. So we could look to buy if the market comes back down here. We could also look to sell if the market comes back up here. If that makes sense. So this could be a strategy we could actually use, you know, at the different zones. But we'll get our zones from the monthly time frame. We know when the market comes up to this point. If you look, every time the market comes up to a certain point, it goes back down. When the market comes down to here, it goes back up. You understand? So we're looking at these zones and we're buying and selling at the different zones. So I could buy at the zone below here, sell when the market comes back up to there, if that makes sense. But of course, your stop loss will protect you from losing all of your account. Yeah. Did I answer your question? So remember, they're two different.
Marlon, I think I'm getting a little confused because when we do the zigzag, that's in the monthly.
Yeah.
When we were doing our buys and sells, we were looking at it from the monthly.
Yeah.
But at times you're flipping to the weekly and the daily.
No. What we do is, sorry to interrupt you there, but what we do is we put our supply and demand zones on the monthly, and then we go and trade on the daily.
Oh, we trade on the daily. I didn't realize.
Yeah. So we're trading on the daily, but we use the monthly because on the monthly time frame we've got a lot more data, and with a lot more data we can basically it's much easier for us to basically to find better turning points where the market will turn. Because remember, on the monthly time frame, we're talking about 400 or 500 pip movement, and then when the market moves to that point, then people will then end up going back in again because they're going to find either the market's going to be cheap at that point or it's going to be expensive. No, people who see this bit now, people who see the market at this point here are going to say it was expensive. So then they start selling. People who see the market comes back down to this zone here, it's going to say, well, this market at this point here, it's actually cheap because it came here, it went back up, came back here, went back up, came back here again. So the likely chance it's going to go back up. You know, of course, it could carry on down to where it was. But this, of course, here is when we had the pandemic, the heights of the pandemic. And that's the reason why it collapses, but then it keeps on going up, goes up to the previous high where it was before coming back down and then start moving back up, you know. But of course, you know, we've got another little pandemic again in terms of the Russia and Ukraine war, you know.
Sorry, could you give an example then, a full example, because you're showing with the zones and saying when it's a good time to trade because we're
because we're on the monthly. So
and then you go to the daily, but the zones are still there.
Yeah, they're still there. So this is where I would want to buy. So when the market comes on here, that's where I'm looking to buy. Once I get my green candle, or I could even put my buy limit there. That's the reason I put my buy limit there.
I get it.
And then I could also, if the market comes up to this point, then I'm looking to sell there, because in the past the market actually, you know, I didn't put it on here though. I didn't put the upward one. I could have put it there. So look, if the market ever comes back up to this point here, then I'm looking to sell. But that's just one strategy. That's not the strategy I'm teaching. I'm teaching in the course that I'm offering. I've just taught you one strategy, which is a supply and demand zone strategy, which it's fine. It's a good strategy, but I rather a strategy like this on a long-term basis. But if you want something that you're in the market on a regular basis, and it takes you about, say, you know, 15 to 20 minutes to you know, a day, because, you know, you look at it, it takes you 5 minutes. You look at it to see if there's any opportunity, you take the trade. But of course, you don't want to overtrade. You only want to trade a limited number of markets. And also it depends on your account. Because, you know, like all my clients' account is in positive. But my account, I blew my account because I went in too big. But when I'm dealing with my client's account, basically I'm going in very small because, you know, but then for me, you know, I was up over 50K, up to just about 6 weeks ago before the Russian war. You know, I was planning to buy a building for my Saturday school and all of those things, everything. And I just went in too big. And another thing as well, you see, if you get too overconfident on these things, then you will blow your account. So, you know, you've got to make sure that you go small, because especially if you don't have the funds, because even though I went in big, if I had another 50K, then I wouldn't have lost a thing, you know. So, what I'm saying is you can make money, but what you got to say this, and this is how I want you to look at this. You're trading here to give you more money than what the bank is offering. Because remember, when you give the bank your money, that money, even though it's secure at the bank, and of course, that's to be a reputable bank, because we've seen what's happened to, is it Northern Rock and that bank that went bust. But what I'm saying is, you give your money to Barclays or HSBC and so on. With those sort of banks, right, then what happens? Your money safe, but what they do is you give them that money, they give you 0.01%, say Barclays, per annum, and then they take that money and they invest it. They don't want that money to stay in their bank. They invest it for you and they make a big chunk on it with the investment bankers, But what we have got to do now, instead of trying to make 50%, because some people, they've got £1,000 in the bank in their trading account, and they're saying that they want me to make 50%. Of course I can make it 50%, but the probability is going to be very high that I'm going to lose. So with £1,000 account, I would say to an individual, try and make roughly about 20% a year. And if you make 20%, that's £100. You've made 20%, that's £1,200. You would never get that from your bank. You understand? And any risk thing that you're going to do is going to be challenging to make 20% on your money. But this strategy I'm using at the moment is doing really, really well. And it's almost like very unlikely that you lose, provided that you don't put big trades on based on your account size. You can't risk too much. If your account size is not big enough, you don't risk too big. And once you've done that, I'm telling you, you're on your way. But it's far easier than this supply and demand one. It's much more consistent because all we're doing, we're measuring from here. We're measuring from this point, from the lowest moving average, and that's where we measure from, and that's where we're going to take our first trade from. I would just take trades, keep taking trades, and we've got a bag of trades. But ultimately, what I've got here is, every single account that I've tried this strategy on is making money. But one thing I don't do, especially on my client's account, I don't mess about with big trades, because I've said, listen, you won't make that money that I'm going to make for you in the bank. And also like teaching you guys, you'll see exactly how I do it, and and also as well, I could be trading your account as well, But as I said, guys, what you would like, what you need to do is just tell me no.
Yeah.
And then you're gonna click on hide all.
Pardon?
Hide all. Go to hide all.
Okay.
Yeah. Okay, brilliant. Now, so what we're gonna do then, we've got yeah. So those are the markets that we've got there. So click on the Euro GBP for me.
I already have it open.
No. Yeah. Just click on click close market watch for me, please.
Okay.
And then click in Euro GBP.
Yeah. Right click.
Click on the no. Don't do that. Don't do that. Just where you see Euro GBP monthly horizontal, where you see that horizontal line there? You go down to there for me, please. No, move your cursor down, further down. Yeah, left now, left, then left again, and then click on the Euro GBP there now.
Okay, sorry, I was thinking of GBP USD. Sorry.
Yeah. So that's what we've got there. So you can see that zone where the market comes down, it goes back up, comes back to that zone and go back up. Okay. But I've noticed there that you put a sell. Now, you put in a sell there because you're actually selling into support.
Okay.
If that makes sense. But that's on the monthly chart. Let's go to the daily to see what it looks like. Okay. The potential could be that, for me, I probably wouldn't want to sell there. Okay. I'll probably move your cursor further. Move your cursor for me. So, where you put your stop loss, probably that's where I would want to sell using the strategy. But what I would want to do though, there's where you're up there. That's where I would want to sell. Yeah. Okay. But move the cursor now back and show me where you think a better buy would have been, a better trade. Where the buy where we could have looked for a buy. No. Forget that. No. Yeah. Where do you think we could put a buy? Move the cursor to where you think we could take a buy. for this trade.
Take it by, we could have taken it by here.
No,
or
move it. No,
here.
no. That's where that's where we'll be looking to take a buy, because that is like the
Yeah.
market hits that point a number of times, and every time it hits it, it go back up, go back up. Yeah. So
Okay.
I would probably be waiting patiently for it to come back there, or take a sell
Okay.
where you put your stop loss. But it
Oh,
seems like
okay.
you're taking multiple sells at that point. So that point could be, of course, you're not wrong in taking the trade there, but I'm looking for where people think it's a bit more expensive.
Okay.
Yeah. But also what you don't
Okay.
want to do though, you don't want to be taking too many trades and of sort of 0.05. Of course, this is a big size account, yes. So so you know that this wouldn't be nothing. That sort of size would be nothing. But also what you've got there as well, you've got a number of correlated pairs. That's something that I'll teach as part of the course. So the in terms of correlation, so we don't trade too much of the same type of currency. Because for example, the Euro USD and the GBP USD, they're exactly the same trades. But of course, we could take those two trades. But say in terms of if I was going to do 0.05, I could do 0. If say my size is 0.05, I could basically, or say it was 0.06, I could share it. I could say Euro USD 0.03 and GBP USD 0.03. So I share the trade between the two. Yeah, but this looks good. This really looks good. Well done. And I love it. I love it. I just love the way it charts set up. Really nice. Really nice. Really happy for you on this one. Yeah.
Just wasn't sure.
When I wasn't
sure where I was putting the lines. I was marking these bits, but I wasn't sure stop loss.
I go to the daily for me, please.
The daily.
Yeah. And then scroll to the end. Click on so go up to the top. So how comes you're so bright, man? Or what teacher? Is it Mark teaching you?
No, I have watched the videos several times, because what I realized, sometimes I miss a step and I have to keep watching it just to make sure.
No, because you only start all already started like
started on lesson 5.
Yeah. Done really well. Trust me. So basically you have the stop loss. Where's the target price?
So the stop loss.
So you pull it down to the bottom there, but we need to then pull it up now. So pull up now, pull up. Yeah, and then pull it up to about there. Yeah, that's it.
I can't decide where to stop. I know I'm looking on the money.
Yeah. So that's 200 pounds. So stop there where this is where the market went in the past. So the likely chances that the market will go back there and then probably turn around. But at least we know if we go at the demand zone at the bottom, and then we go up, and then we basically, if it goes up to the resistant level, then we'll sell and let it come back down. Yeah.
So when you decide to buy to put 0.05, how do you determine?
Because we could start with 0.01 on a real account, because it depends on the level of risk that we're taking. Now, the bigger the 0.05, we go to 0.06, 0.1, so it's almost like we're saying that 0.05 could, in terms of for a stop loss, could be it could worth say 100 pounds. But if we did 0.0, if we did 0.01, that then would be 10 pounds. Or could you understand? It could be, or that 0.01 could be 5 pounds in terms of the risk. Yeah, but we won't be really doing it like that. For now, you're going to be doing like 0.01. That's the level that you'll be doing. In terms of on the real account. So when you first start, because you'll press the wrong button, you understand? So you don't want to, so when you go into the real account, and you would start like with a 250 pound account. Because I remember once my daughter came in the room, and I was supposed and I was trading a news event, and I put in, fortunately for me, another grand in that account, grand with some profit. And then what happened? My daughter came in, and I was supposed to put 0.1, and I typed 1.1. That was 100 times the size of the trade I wanted to put on, and the market went in the opposite direction. And I pressed buy and just dropped, and then come right back into my favor. But then guess what? It's already hit my stop loss, wipe out that money because I put the wrong size trade. So all of these things we've got to make sure we get right. So it's all about learning, it's all about practicing, it's all about believing in what you're doing, but also appreciate that this is a new skill. This is not just a get rich quick thing. It's not going to be like that. You know, because a lot of people out there, they're selling you, oh, you're going to be driving Ferrari, you're going to be doing that. And the only way you're going to be able to drive Ferrari and all that, if I had, say, 250,000 pound in my account, then I can risk very small to make big profit. You understand what I'm saying? If I have 100K, you understand? So that's the sort of thing. But if you go like, you want to make everything in a day, you'll end up losing the money really, really quickly because you can't be taking too much risk. Yeah.
I was asking also the snippet tool. When I went to the snippet tool, and I attach it to the WhatsApp. It's saving as a file that you have to open. You know, you're just not seeing
No.
the.
What you do, right? You can put WhatsApp on your computer as well. You know, right?
Okay, do it from the computer.
Yeah. And then when you basically, so you go in your snippet for me.
Yeah.
Go to your snippet. Okay, and then what you do now, you basically you
That's
what you see when you right click on this now, right click on here.
Okay.
It's already copying, but if you copy,
Yeah.
just go to copy. And when you copy that, you just right click it into WhatsApp and it basically saves it.
Okay. That's fine. I didn't have WhatsApp on the laptop. I
And you
emailed
can
it to
also put it
myself.
in Telegram as well and do exactly the same. Yeah.
That's fine. All right, that's fine. Okay, thank you.
Okay, yeah, man. Bless. All right.